Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. What a crazy Tuesday. This indeed is the squeeze from hell. This is what we're looking at right here. This is a chart of the S&P 500. Yesterday was Monday. We had that bullish engulfing on Monday at highs. I didn't think it would play out, but boom, today it played out. Today on the S&P 500, Tuesday the 14th of April, market up 1.2%. to make up for another 1% move yesterday. Crazy, crazy move. We are literally at highs. Literally at highs. Okay, this is the squeeze from hell. V bottoms are vicious. Gap up and go. This was the best case scenario as bulls that we were hoping for. And it's playing out. Okay, so before we get to the squeeze from hell, let's talk about always the market and the technical picture first. Okay, technical picture is bullish. However, we're still in this chop zone. I think this is the knife through butter of our chop zone. Could go right through our chop zone that we were in here for the past 6 months. We had a vicious bear trap here after it broke below the 652 on the SPY and coming back up, and now we're touching highs. Okay, this is a crazy, crazy squeeze from hell. Okay, so the technical picture, if we bring in the moving averages, we're above everything. Everything. Prices above every moving average. The 50 is the one in red, and the 200 is the one in blue. 200 is still upward sloping. Never had a chance to go down. So this is a very, very bullish configuration. And we're right at the highs. I said, well, I'm going to reserve my bullishness until we break into the highs. But this is so close, and this move is so strong that we have to go. Technicals are bullish. Okay, we're gonna say it. The technicals are bullish. And if you look at the RSI and everything, plenty of room to even go higher. Nothing's overbought. Okay, yet. And look, this is the MACD. We're just barely into positive territory. Okay, we were always negative this whole move down. We were below the zero line, which is the middle line, and now we're starting to go up above the positive line. So the technicals, plenty of fuel to go higher. Okay, so technically speaking, I'm gonna say bullish, even though we're not at highs because of the violence of this move. Okay, catching a lot of people short. Okay, we always pair our technicals. Let's get rid of the moving averages for now. We always pair our technicals with sentiment. Okay, and sentiment, neutral. We were at fear yesterday. We got into neutral. Plenty of room to go to extreme greed. As you can see, everything was at extreme fear. Remember when we were at like 9 at the bottom? We're back now to neutral here. This was extreme fear. From extreme fear to neutral. Nice. Stock price strength is still extreme fear. Not a lot of stocks making 52-week highs. Breadth is at fear. Put call options still being puts are still being sold. We have extreme greed on the safe haven demand. Okay, so anyways, what I'm trying to say here is that slowly we're going to recycle into the neutral greed and extreme greed, and I want to see the market really get into a euphoric stage before I start getting worried, because as you know, during this entire bull market up, we never ever had this gauge stay in the greed for more than like 3 days. Not even a week. Maybe in the beginning of the move a week, but I've never seen, in the past 6 months, I haven't seen it stay in greed for 3 days and nothing in extreme greed. Whereas for this down move here, this brief, not even like a brief 10% down move, we were staying here for weeks, 2 to 3 weeks between fear and extreme fear. I want to see the exact same thing. I want to see a mirror image to the upside before, as a bull, I start to get worried, okay? And the sentiment, not just through here, but the anecdotal sentiment, everywhere you look on X or any social media, okay? I'm still seeing bearish news. I'm still seeing, I don't know, some guys posting a chart that says, yeah, guys, a chart you must see. This hasn't happened. Like, it only happened 3 times in the past. And every time it happened, there's like a massive, it happened in 2008 before the crash. It happened in 2020 before the crash. It was like, it's all fear porn, okay? Even at highs. Okay, this is why the technical picture is bullish. Here, plenty of room to go even higher. The sentiment is bullish. Actually, like if you look at all the sub-indices here, they're bullish. And you have anecdotal sentiment that is bearish. Bullish meaning that it's a contrarian indicator. It's closer to scared. It's closer to fear than it is to greed. Okay, so that's bullish. Okay, and the same thing on social media. There's still bears out there, crazy bears. Very, very rarely do I see somebody who's a bull. Okay, so this move right here checks all the bullish boxes. Okay, literally the squeeze from hell. Okay, but before we get to the squeeze from hell, we had one macro piece of data coming out today. Remember, during this whole down move, I kept saying that the fundamentals were bullish. We always look at three legs of a stool: fundamentals, technicals, and sentiment. Okay, the technicals we looked at, the sentiment was always fearful, which means it's bullish. The sentiment was hovering between neutral to bearish briefly, back to neutral, but the fundamentals never strayed. The fundamentals, all the fundamental news was still bullish, still positive. And today is no exception. We had the PPI, the producer price index inflation. The headline PPI was at 0.5%. Previously it was 0.5, but here's the deal. They were expecting 1.1% for the month. 1.1% for a monthly print. That's like 12, 13% a year of inflation because of the war. And apparently it's not happening. It went to 0.5, same as last time. Okay. And what's even more surprising is the core PPI down to 0.1%. Okay. This was the big move here. And it wasn't really, this could have been the tariffs that were delayed for a year and it showed up in January. I don't know. You never know. But right now, the PPI, 0.1%, and they're expecting 0.5. So huge drop. Inflation is running cold. So the big boogeyman that created this down move was oil is going to spike inflation, yet inflation muted in prices, in producer prices. Okay. So at least in producer prices, we see this, not in the other forms of inflation. Oops, sorry. So in producer prices, we see this. So another positive macro print. So you have the macro on your side. The fundamentals are still positive, still bullish. Okay, so let's get to the squeeze from hell, which is this chart here. Like stocks post back-to-back gains as traders remain optimistic for an Iran-US deal. It could be that. It could be just that. It could all get reversed again if back to war. But it seems like even from back here, from 3 days ago, where we saw positive news, okay, and oil not moving. What we want to see here is the oil market. Okay, the oil market was the fear gauge of that entire drop that we had in March, and now it's starting to roll over. It's still positive, still like bringing in the moving averages, still above the 50, but below the top two. Okay, when you bought this breakout here, a technical breakout, you usually have to sell when it closes below the 10 or the 20, depending on your criteria. So most people would have gotten out around here. Okay, but the point is that this is still strong. It's still above the 50. However, I think this is going to be the last man standing. I think, like we said, okay, on the SPY, when we were down here, you're never going to get good news to go long, okay? And even with the highs, we're not getting good news in terms of the oil market, okay? It'll be too late. If you're waiting for good news to go long, you will never be a successful trader. You have to go when there's max fear, okay? When there's only bad news, okay? It's very tough, but you have to do it. Good news will happen when we're at here, 720, 730, and then you have to like start worrying, okay? So the oil market, in terms of this squeeze, is still high. We're still relatively high, okay? So that's going to be the last man standing. The market's going to go up as this is dropping at the same time. It's going to be like a perfect negative correlation as the market goes up, in my view. Okay, so we had oil still holding, still keeping the bear hopes alive. The bear market hopes. Okay, that's why even at these highs, we are seeing a lot of bearish news, which is exactly what you want to see as a bull. Okay, so oil still holding. What about gold? Gold is starting to come back. Okay, gold is starting to make a move back up to the highs here. It's approaching the $5,000 level. We're at 4,800. Very good move. Slowly, slowly. Nobody's talking about it. This is why I love it. This was a flush out. This move down here, if you bring the moving averages, is the first touch of the 200. You missed it because it happened in overnight in the London move during the London Open, okay, European Open, if you will. So it didn't really touch. So maybe as it goes higher, it might touch again. Who knows? But I'm still thinking gold stays between the 4,500 and 5,000 for a while. I don't know if it'll break out. It could very well break out. You have no idea. If the war's over, we go back to central bank buying, especially if Iran is intact. You're going to see a huge second power emerging in the world, and that is the BRICS. The BRICS axis is going to be in ascendance, and they will be buying gold for their monetary system. Okay, so we have gold coming up with the market. Okay, with the market. What about Bitcoin? We haven't seen that in a while. Bitcoin. Okay, as I said, I'm expecting it to break above the 73,000 level, which is key resistance. Was support for a while. Boom, boom, until it broke, Here, tried to break out. No, now it's resistance. Very, very close to breaking it out. We closed above. Hopefully, like if you look at we have plenty of room in the RSI and MACD to go higher. So I think it goes to the 90K level around this resistance zone. Okay, that would be the next level in my view. So I think that as the market goes up, you're going to see all these risk assets coming in. You're going to see all of these sub indices on the fear and greed index, like stock price strength, which is new 52-week highs and minus the lows on the New York Stock Exchange. That's going to go up. You can see stock price breadth expand. Okay, you can see more calls than puts. You're going to see all of this reverse. Okay, but it's too late now. You have to do it in terms of going massively long. You had to do it before. Whereas Bitcoin, you have a chance to go up here. I'm not saying I'm bullish Bitcoin. I'm not. Okay, because it's still a downward trend. I don't love this space. I just like it for a short-term trade up to 90,000. Okay, I will not go long Bitcoin. Okay, like we said, I'm long SPY, general equities, if you will, and precious metals. Okay, those are my two main moves. Okay, so that's it, guys. We have all of these sectors leading. We have the semiconductors, as we said yesterday, boom, even higher. Leading sector blowing through everything. The SPY is the squeeze from hell at highs right now after a huge move. We have U.S. oil holding the line, but it's cracking. Okay, no pun intended. So I think it cracks even lower. I think we go much lower in oil. And Bitcoin, yes, looking for that Bitcoin move to go up to 90K. So guys, that's it for today. Squeeze from hell playing out. It looks like I'm going to lose on the small short positions that I took around here. I don't mind. If this is the best case scenario. I'd rather lose a little bit here and make massive amounts going into new highs. But I suspect, I don't know, like we might hit the highs. If it's really, really strong, we hit the highs. We don't even break. If it's really, really strong, what I see going forward is a break of the highs and then a retest of the highs before going higher. If it's medium strong, we go down, maybe retest this level 165 or maybe 688 to 685-ish level before going to new highs. And if it's medium strength, we go back down to this level. Okay, we don't know yet. Things are still very, very stretched. They could get way more stretched before a rebound goes down, before the rebound going back down. I don't know. I'm just saying that very, very strong move will break through and then retest the highs and go up. And people will still be short or saying that the market's going to tank and whatever. So don't listen to the naysayers. Just look at the evidence. You have the three-pronged approach, fundamentals, technicals, and sentiment, and they're all pointing bullish. All right, guys, later.